chart patterns. And in this video, I'm going to introduce you to what chart patterns are, how we're going to use them to trade, and how we're going to incorporate them into our advanced technical analysis. And this is where things start to get really interesting, because this is where we actually can start seeing what price action tells us when actually it reaches to important levels. But let's start with what chart patterns are. A chart pattern is a distinct formation on a financial asset's price action chart. These patterns have been studied and they repeat themselves with a very high percentage of the same results. In technical analysis, history repeats itself, and by analyzing past price action, we can determine that in future price cycles, the same patterns will emerge, giving us approximately the same results. And this is why the signals given to predict future price action when these patterns appear can be very accurate, and this is why trading these patterns can be highly profitable. Okay? And not only chart patterns are accurate, but we will actually use them and apply them into our analysis to get confirmation on our trade ideas. Of course, that you must bear in mind that spotting and trading chart patterns alone can be a very profitable strategy too, and there are traders out there and technical analysts that only focus on levels and chart patterns. In this course, we will teach you how to spot them, how to trade them, how to wait for confirmation on them, and how to use them in a more advanced analysis, so you can get better entries and higher probability setups. So now let's ask ourselves, why do we incorporate chart patterns in our analysis? And I personally do it daily. When I'm looking at support and resistance levels, I'm also looking at what price action tells me. Remember that what we learned in the past lesson with what candlesticks, or the information that candlesticks gives us. Well, chart patterns gives us a more complete and overall picture of what price is doing and what levels are holding or not. So let's get into it. We incorporate chart patterns into our analysis because it's a way to confirm our bias. Let's take an example, and let's imagine we are at a heavy resistance area after a pullback on a downtrend, and we want to go short. Here is the price action chart that I'm talking about. We are in a heavy dip or a heavy downtrend, let's say, and we are looking to get in. Remember that in trading what you need is patience. And of course, we are not going to jump in the middle of the down move just to get stopped out without looking at some levels, okay, or confirmation that the move is in fact continuing. We are going to wait for a pullback at a previous support zone that is now being tested as resistance. Okay? And what happens here? We spot a chart pattern at this area of previous support and now resistance. Of course, this is not a chart pattern. This is just an example of a pullback to a previous zone of support. And let's assume that this is a chart pattern. This pattern signals a reversal in price action. Our short idea to sell the rally is confirmed. Remember that in downtrends we are going to sell rallies, and in up moves we are going to buy dips. So when we go here and we have a rejection of this previous area of support as resistance, and we get a chart pattern that signals a reversal in price action, we have a confirmation of our short trade idea. And we are in a high probability setup for a nice trend continuation trade. So everything points out that going short is the right decision to make here. And this is how we're going to incorporate chart patterns into our trading decision.